Hi everyone, this is Saturday the 3rd of December. Welcome to another market update. Let's get started. This is a daily chart of gold. In the midweek video that I did, I entered a trade at 1706, and no sooner had I finished uploading, the price proceeded to rally sharply on the news of major liquidity action from the world's central banks. Finished the week with this very bearish candle just here. It looks like we're about to roll over. We have come up against this long-term trend line, and that could be some interim resistance round about 1760. Major resistance though remains 1805. We need to close above there in order to get any further. The thing is, if we do close above 1805, that would imply a move back to the old highs of 1920, and that would imply 2000, and 2000 would imply 3000. So the first stop on this roadmap is 1805. Last week has been a US-centric week, and we've seen the dollar pull back, and next week is a Euro-centric week, so we could see the Euro pull back. We'll just have to wait and see. But after this news of the liquidity action from the world's central banks, the downside, I do believe, is limited. This is a painting by one of my favourite artists, Magritte. This painting is called The Treachery of the Image. The translation of the French is, "This is not a pipe." So this painting is cited in art history, and the point that Magritte was making is that it's not a pipe, it's a representation of a pipe. And I'd like to use this as a starting point, as an analogy for the markets. This is the daily chart of gold. This is not a market. This is a representation of a market. Let's review some recent history. First, we had the S&P downgrade of US credit. Gold rallied from 1650 all the way to the highs over 1900. Then the CME raised margins and the price plummeted in the space of 3 days. Absolutely unprecedented move. Gold then rebounds to test the highs again. The Swiss National Bank decided to peg their currency to the euro. When the Swiss National Bank did that, not only did they do it following a US holiday, but minutes prior to the announcement, they sold a load of paper gold, and this flooded the market and amplified the move. So this had a counterintuitive effect. Swiss franc is traditionally seen as a safe haven, and when the Swiss announced they're going to peg their safe haven currency to the euro, the most obvious place to go would be gold. Now, not only that, but the CME starts raising margin requirements again, which causes the gold price to plummet again in a period of 3 days. An absolutely incredible move, rivaled only by the actions in the previous month of August. While all this is happening, we have riots throughout the world, deteriorating situation in Europe, banks going bust, the fundamentals for fiat money getting worse and worse and worse, and the fundamentals for gold getting better and better and better. Through the interventions of rating agencies, private corporations, central banks, this market is managed and the line is painted. This is not a market. This is a representation of a market. This line is about managing expectation and funneling money to predetermined places at predetermined times. This has nothing to do with supply and demand. This says nothing about the supply and demand of physical gold. Changing the format of these updates, I'm going to do one update every weekend, and I'm going to try and do one midweek video which will be loosely associated with the markets, but we'll also talk about other disparate subjects, for example art, music, fashion. So I should be doing one of those videos in the next few days. Until then, enjoy the rest of the weekend, and thanks for watching.